Financial Fitness with J. Daniel Pluff is made possible by our members.
And by Corporate Maintenance Systems, providing janitorial and commercial building care for all business sizes and types since 1985. On the web at corporatemaintenancesystems.com or 463-2779.
And by BCG, Benefit Consulting Group, providing their clients access to a comprehensive portfolio of benefit programs, human resource consulting services, wealth protection strategies, and retirement plan design and administration.
Well, many people believe that problems in the real estate area cause much of the downturn we saw in the economy and in the overall financial markets. So now, over a year later, how's the local real estate market doing, and what's the outlook for those looking to buy or sell? We'll get an update on housing for Central New York and see if our local properties are holding value. But also, there's been much talk recently of these so-called short sales and foreclosure properties. We'll see what those issues are about and how people facing foreclosure are faring in this market. Also, we'll get some legal, banking, and real estate advice from our experts. It's all after we welcome you to this edition of Financial Fitness. Good evening, everybody. I'm Daniel Pluff. Glad to be back with you. And yes, tonight we'll take a little break from Wall Street and talk more about the real estate market, both here locally and maybe even some national issues as well. A lot going on, obviously, in that area since the 1 year when we visited last time. Elizabeth Polverenti also has the night off. She'll return next week with all the numbers on Wall Street. But tonight, here's a few areas that we do plan to cover. First of all, some new and innovative tips if you're looking to buy or sell real estate. Some of these may surprise you. There's obviously some basic things in there, but some new tips tonight for buyers and sellers. Also, if you have fallen on hard times or know someone who has, there are some options. We'll talk about that during the program. Unfortunately, kind of a sign of the times, but we'll talk about that during the show. Also, how technology has been impacting the real estate market in terms of marketing, buyers and sellers again. We'll see how our experts are using technology. And if time allows, and I hope it does, certainly yours truly has a little axe to grind concerning the whole tax assessment issue and whether or not you think you're paying too much in property taxes. We'll see what our experts say about that later in the program. We're loaded right to the gills tonight on the panel. 4 guests, good guests joining us for the program. A couple have been here before. One is brand new. But we do want to welcome back to the show Seth Fischer. Seth is an attorney and president in the firm of Hill and Fischer PC. Seth, you've been with us, I think this is probably your 4th or 5th visit talking real estate. We're glad to have you back and want to say welcome.
Glad to be back, Danny.
Not Louise yet. Chip Hodgkins. I'm a little out of order, but Chip Hodgkins also returns. You were here just 1 year ago. Chip, associate broker and partner with Hodgkins and O'Hara, part of the real estate team at Caldwell and Caldwell Banker. So we're glad to have you back with us, Chip. We'll get your insights on market activity, etc. But I want to welcome you back.
Thanks a lot.
New to the program is, I was eager to say hello to you, Louise. Louise Hoffman, Vice President of Residential Lending at Salve Bank. Obviously, you need a banker on board. It's a money issue, so we'll talk to you about some of the new options available and whether or not banks are loaning now. There was a period, I know, where it was tough to get a loan, but we'll talk to you about that during the program.
I will.
And finally, Tom O'Hara returns. He is also an associate broker and also a partner with Hodgkins and O'Hara, part of the Caldwell Banker team. And both of you fellas were with me last year, so I'm going to begin with the both of you if I can. And you know, Chip, maybe just to you first, but you know, I was half kidding but half serious when I said a lot of folks do blame the whole real estate market for the mess we sort of got into market-wise and economy-wise.
Yeah.
You guys were here last year. Things were just beginning to sort of unwind and what have you. Give us an update, obvious question, of course, update on specifically how our market looks right now and maybe a little perspective our market now versus a few years ago.
Well, it's a lot more stable than it was a year ago. And the numbers for April just came out today, as a matter of fact. And you've got 6% more homes sold this April than April in 09.
Mm-hmm.
So that's a good, we've really stabilized, and we're seeing a little bit uptick. There's good news and bad news. There's 27% more homes currently being listed.
More inventory.
More inventory. So buyers still have a lot of houses to choose from. And sellers need to be very realistic. If you've got 27% more people that you're competing with.
I think last year I asked you, and I thought I knew the answer. Is it a buyer's market, seller's market? You pretty much admitted you have more of a buyer's market last year. Has that obviously been the same? Is it more of a buyer's market this year?
No.
You know what I'm saying?
It depends on price range. In the first-time home buyer price range, it's both a seller's market and a buyer's market. But over the $250,000 price range, you are seeing it is still a buyer's market.
What about to either of you, but what about the economic stimulus plan? Because there was some big incentive for first-time home buyers. That's gone.
That's gone.
Problem with it now? Or?
It's a little too early to see if that stole from the May-June market, because we did see an uptick in March. March was a huge month, and April was a good month. But I think it ignited something, and that flame's going to continue forward. We really believe that we're going to see the spring, the May-June market continue on.
Yeah, we're just getting into it now, I suspect, right? Now, Tom, given the economic backdrop, normally on our shows we talk about, the stock market and investment planning, et cetera, and people have been worried. People are nervous. They watch what's going on. I think if you asked any 10 people, what's the economy like, they're not going to tell you it's great. When you're working with buyers, do you still sense a lot of reluctance? Are people afraid to, pull the trigger, if you will, because a purchase of a home is such a big undertaking?
No, I think that it's good. I'm going to go back a couple steps here real quick, too, about a national level and a local level.
Sure.
The real estate market on a national level is not what we have in Syracuse. It's completely different. We're pretty stabilized here. Our average price of a house is $125,000, $124,000. That's been consistent for probably the last 5 or 6 years. That has not changed. Based on those numbers, the average mortgage payment for an average house is like paying rent. So that really hasn't changed so much, for the economy here.
And I think it goes without saying, but I'll say it anyway. We here in Central New York, we didn't experience the Florida and the Las Vegas event where prices skyrocketed. Correct?
Exactly. We don't have programs with the interest only. People weren't using the interest only. They're using, what their parents have always taught them, and traditionally, your financing is 30-year fixed. We've had low interest rates, so there's really no other reason to go with any other programs on that. I think the other thing you actually talked about earlier, too, was, is it a buyer or seller's market? It really depends on which market. So for the first-time home buyer, it kind of was a seller's market because there were very few houses that were out there that were in great shape. So if you were that owner who had the house that was actually in great shape, renovated, you actually had multiple offers on your house.
Yeah, and I want to come back and talk to you guys both about how values are holding, if they are, what's going on, and how to maybe assign a correct value. But Louise, I've got to pick on you a little bit too. I can't leave you unscathed because there was criticism also in the past couple of years directed at the banks. For a while, everyone was saying, well, these banks were just throwing money at people. You could walk in, sign your name, get a loan. It didn't matter if you could pay it back or not. I suspect that's all changed given what's going on.
Drastically, yeah. I don't think that was as prevalent in this area as it was in the metropolitan areas, but certainly that went on here. It's been a very difficult year, I think, for lenders because the pendulum swung from, easy qualification to very difficult qualifications in some respects, anyway.
And where are we now in that? If I go in and apply for a 30-year mortgage, am I going to have to jump through hoops?
You won't get along.
Well, yes, I'm unloanable, as they say. But the average person?
No, not at all. Not at all. I mean, some of the loan programs that existed before, no doc, no income verification, low doc, interest-only programs, those programs are pretty much gone. And piggyback financing.
I'm coming to you, Tom, but and I'm, not to promote local banks, Salve Bank, M&T, whomever here in town, but I do think you bring up a good point. We didn't see the big surge like we saw in Florida and other places, and I think sometimes when the lender knows you, does that make a difference? Does that help in a local community?
Somewhat,
really?
Somewhat. But, we still have to, we're still audited. We still have to make loans. We can't.
You still have to work to the formula.
Absolutely. We can't use disparate treatment, so,
Yeah, but you're making loans now.
Absolutely.
Is there a big demand for loans?
There's a steady demand for loan.